Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. Let's talk about immigration, right? The number one bullish argument that a lot of real estate investors have in Canada, specifically Toronto and Vancouver, is that the immigration is expected to rise, right? We're expected to see that Canada is going to see a huge inflow, and it already is, but in the future also continue to see huge inflow in immigration, which is going to prop up the real estate market. And we've seen a little bit of this in other countries as well. You look at certain European countries, increasing the population, bringing in more immigrants. But the story on that side in certain European countries were that they brought in the immigrants because they had, currently are facing labor issues, and they wanted to solve the labor issues with more immigrants, but it wasn't being solved, and they're still seeing problems. And because the reason they're seeing the problems is because the skill level of the labor and the fact that it's taking time, right? The immigrants are coming in, they're getting educated in the school system, taking them, let's say, around an average of 5 years to finish school and then eventually get into the job market. And if there is a problem already with the labor market and the baby boomers are basically retiring and leaving, this makes the situation worse off, right? So same thing in Canada. You can expect that, yes, the labor market, Canada is bringing in more immigrants to solve the labor shortages. But if a lot of these people are coming in are students and they're taking time to get the skill level, or simply they're not working, then it may not be very good in terms of the labor market and maybe the economy as a whole. So your growth that they're expecting to generate from this may not be as they expected, right? And that may turn down and may cause a lot of immigrants to shy away from these hot real estate areas like Toronto and Vancouver, and may end up reversing what Canada's government wants is more immigration. You might see people start to leave, right? More people start to leave and go in other areas. Now they could go to other provinces, right? They could go to Alberta, they could go to, Winnipeg, they could go to New Brunswick, etc., right? However, Quebec is a little bit of an iffy area. They're seeing some problems because the province is French speaking, and a lot of these immigrants don't speak French, right? So it's tough for them to go there. So certain areas may see growth, but in terms of Toronto and Vancouver, if they're not able to purchase a home, the prices are too high, they're unable to get a job because they're not skilled, or it costs them too much, then maybe you might get the reverse. And the reverse, that the expectation of, hey, immigration is supposed to help our economy, we're bringing a lot of immigrants, but they come in, they maybe learn, they go to school, and then they take those skills somewhere else. Maybe they take it somewhere else to another province, or they go back to a different country or back to their home country. And you're seeing some signs of people fed up with the Toronto, Vancouver real estate market and saying, hey, we need to get out of this place because it's just too damn expensive. Why should we even live here? It makes no sense. And that would probably be the argument for the bears to say, hey, look, everyone was expecting immigration to solve the problem and keep the real estate prices propped up and so on and so on. And the reverse is actually happening. I'm not saying it's happening right now. You're seeing some signs of it. But if this continues to be a theme in the future, and especially with the recession looming, then what will that look like for the Toronto and Vancouver real estate market? And on top of that, let's not forget about the baby boomers, right? That have invested a lot of their money into their property. Their retirement portfolio is basically, for many of them, is their house. And if they want to cash in on the retirement portfolio, then they would have to sell. And if there were some sort of panic that were to happen in the economy, massive job losses, unemployment rate skyrockets, and they need money, right? then maybe you could see a lot of these houses come up for sale and cause the inventory supply level to go up, which would cause the prices to come down. And let's also not forget that for a very long time, we've seen low interest rates and investors in Toronto and Vancouver were killing it because of the low rate environment, the low cost of capital, and the real estate going up and up and up and up. Now that the rates are moving up higher and they continue to move up higher in Canada, that is putting a lot of strain and pinch for these investors who are now looking to basically flip and sell their property. And if it continues to be worse off, and as a lot of central banks around the world are saying they want to keep rates higher for longer, if they're unable to manage the higher rates, then another argument is that they will sell and panic sell on these investments and take the loss, which again will bring down the prices. Now, what also about in 2021, 2022, when rates were really low and people got a bunch of mortgages at very low rates, what if they also have to refinance or they're coming for renewal in 5 years? So in 2026, 2027, when a lot of them will come for renewal, if the economy continues to be strong and resilient, then most likely, as the Bank of Canada has said, you're not going to see rates come down for a very long time, especially if the economy continues to be strong and resilient. And if that's the case, the economy continues to be strong and resilient, very unlikely of low rates, you might see a high rate environment for a very long time. And if by 2026, 27, those renewals kick in, all those people who got those low rates are going to experience a higher cost in their mortgage costs, then they're going to end up in a really, really tough situation, which may also cause them to either sell during that time or try to sell before that, which will bring in that inventory levels, right? So there's bullish arguments to be made, bearish arguments to be made. The bullish is the immigration. What if the immigration doesn't work out what people are expecting? That, hey, we're not going to get that many people, or these people who come in end up not really working or getting the skill and finding another place to live in just because it's so damn expensive. And plus all of these other factors like the baby boomers, like the supply that's coming into the market, the retirement funds, which is their house, right? And on top of that, these renewals that are to come later on in the future, if nothing bad happens right now and continues to be smooth sailing, then that doesn't look good for the long run, especially the fact that a lot of people were comfortable with lower rates and now have to experience much more higher rates, right? And I didn't even touch on the variable component too, the people who are experiencing the variable rates. But let me know what you guys think. Leave a comment below, subscribe, hit the like button and bell icon to be notified on the next video, and I'll see you guys around. Cheers.